Today, the Turkish lira dropped to a record low as price and tax increases reduced bets of a possible interest rate increase. Now, Turkish political problems have been hitting headlines since the arrest on December 17th. I'm joined by Sevin Ekinci from Ekinci Consulting in Istanbul. So Sevin, can you tell us what the situation is like? How is it affecting the markets, and do you expect any change in interest rates?
Well, it's a messy situation right now, what's happening in Turkey. We were expecting some political instability within the country because of the elections. However, this corruption probe was not in expectations. Maybe very well that this is the third term of Prime Minister Erdogan. His party is leading for a third term the country, and suddenly some corruption cases occurred, like just 1 week before the New Year, and it hit the market, and the lira weakened from 202 to 215 against dollar. And now it's trading at 2.18 against dollar. So this is a sharp sell-off in the markets. And I think this will continue because there is also elections in March. This is local elections. It's not a general elections. But there is also presidential election in August. So this uncertainty is likely to continue. And previously I said that I'm expecting a level of 2.20 for the Turkish lira against dollar throughout 2014, and I'm keeping this forecast. However, I might revise it for the next days. I might revise it to 2.25 against dollar on average for the whole year. Apart from that, there is no statement from the Central Bank of Turkey yet about the developments. The recent tapering decision from the Federal Reserve of the United States did not cause a sharp sell-off in the overall market, but it mainly affected the Turkish market because of the local problems. So I'm personally expecting a rate hike from the Central Bank of Turkey within this month. If not, we will see further sell-off in the markets for sure. They cannot go further with these levels of interest rates.
Sevin, last time we spoke, we discussed the government's inflation target. Now, what was your target for 2013, and what are you predicting for this year?
Their last meeting, actually, they were still hopeful for the end of 2013 inflation figure. The inflation data for the whole year of 2013 will be announced tomorrow. And previously, Governor Bahçe said that they expect 7% inflation for the whole year in 2013, but this should be the case only if the monthly inflation in December came out at 0.1%. So I'm not that hopeful for the inflation figures, and I think it will be about 7%. If not 7.8%, they should. Even though they should write a letter to the government for why they did not reach this target. This is not a target actually. Why they did not reach their official forecast. The medium-term target is still 5%, way below the actual data. So we will for sure end the 2013 about 7% for the inflation. But for 2014, there will be both pass-through effect, fixed foreign exchange pass-through effect, and also today they announced a tax hike on tobacco and gasoline products. I'm expecting this to make 1% increase on the inflation on January. There was a favorable base effect in January. It was likely to reduce the annual inflation below 7%, but with these tax increases on tobacco and gasoline products, I think it will be it will be very close to 7% again. For 2014, one shouldn't be very hopeful. from the inflation side. My concerns were mainly about the growth rate, but there are also some risks for the inflation figures as well. This depreciation in the Turkish lira will for sure put its effect on the level of the inflation, because there's a high foreign exchange pass-through effect in the inflation in Turkey. It's around the Central Bank of Turkey said that it's around 13%. There's a 13% FX pass-through effect. And overall, I should say that it will be very hard for us to see an inflation figure below 7% in the medium term.
Sevin, thank you very much, and I'm sure I'll talk to you very soon. Well, viewers, that is it for right now, but do stay tuned as we have plenty more coming your way.